Hi everybody and welcome to your TorFX weekly market update. It's the 24th of May 2016. I'm Nathan Bray. I'll be your host. We're going to take a look at all the key news events coming out this week and of course what to expect for the week ahead. But first, is there going to be a rate hike in the US in June? The media seems to think so. Let's break down exactly what the Fed has to say.
The big news last week came from the Federal Reserve, suggesting that the June rate hike was firmly back on the table. The mainstream media effectively reported it like it was a done deal. But what in fact the Fed said was it might consider raising rates as long as three criteria were met or three tests were passed. So let's have a look at those three tests and see how we're doing. The first, of course, was a rebound in the US economy. Now, since the December rate hike, the US economy has suddenly weakened. In fact, their expectation was a GDP growth of 3%. But what we saw was half of 1%. The second test, of course, was further strengthening in the US job market. And this comes on the heels of the worst job report in the last 7 months, with only 160,000 jobs created. And we've also can see here where observers are suggesting that more jobs are likely to go from the oil and gas sector, which are highly paid sort of full-time jobs. And we're already seeing a huge increase in part-time jobs over full-time jobs. The third is a little more interesting. What we've got here is they're looking for an inflation target to be met of around 2%. That's the goal for the Fed for the year. And we did see an uptick in the CPI data, and that's what I want to get into. I think this was the data that came out that got everybody excited about potential rate hike going back on the table, and this happened earlier in the week. So let's have a look at this CPI data. What we can see here is, yes, there was an increase. 0.4% up from the 0.3% expectation. That's your CPI figure. But when we have a look at your core CPI, it didn't move. It's still sitting there at 0.2%. So what's the difference? Well, the difference between these two is the cost of food and the cost of energy, or basically your petrol. So what we're seeing in the economy is people having to pay more for food, not something they want to pay more for, and having to pay more for their petrol to go in their car, not something they want to pay more for. So what you're doing is really charging people more money in these areas, and they can't spend it in other areas of the economy. So I certainly don't see that CPI figure as being positive at all. What it reminds me of, what the Fed's doing here, is when I used to say to my mother, is a holiday in Disneyland on the table at Christmas? And she'd say, sure it is, based on the condition that we win Gold Lotto first. Let's have a look at what to expect for the news coming out this week. A lot of global GDP data coming out with RBA Governor Stevens speaking on the Aussie on Tuesday. And then, of course, you've got your German final GDP quarterly coming out, looking at a target of 0.7%. And, of course, your German ZEW economic sentiment coming out as well. At this stage, we'll take a quick look at this euro, and you can see this euro here has failed, and it's sitting back down, just desperately trying to cling on to some daily support there at 112.15. So that's worth keeping an eye on. But then as we move back into the news, we can see you've got some pound inflation report hearings coming out, and then of course your Eurogroup meetings will be going on. And then in the evening we've got US dollar new home sales coming out, and then on Wednesday morning you've got your trade balance on New Zealand, your German info business climate coming out there as well. But as we move into Thursday, this is a big day for the market. We've got some Canadian overnight rates coming out, looking to stay steady at 0.5%. Capital expenditure on the Aussie, and of course your New Zealand annual budget release. But this will be interesting. Just after the London Open on Thursday, we've got our second estimate GDP quarterly coming out. It all looks pretty flat there at 0.4%. And then of course your core durable goods orders coming out on the US dollar. That's going to be interesting there. And of course your unemployment claims are still fairly high there at 275,000. And then finally on Friday, all eyes, I think, will be taking a close look at the data on the US with their preliminary GDP figure for the quarter. Supposed to be coming out at an uptick there at 0.8%.
Well, that's all from me. I look forward to speaking to you all next week. It's Nathan Bray for TorFX.